Hello and welcome to another video. And this is the video on the most interesting topic, the liquidity ratio. In this one, we have analyzed the balance sheet last time, and now we'll cover some of its important ratio, focusing on the liquidity ratio first. In my previous video, I have already covered the profitability ratio, and where I have covered the gross profit margin and all. If you haven't watched that video, I suggest kindly watch that one. Okay, so in this one, what do you mean? So let's get some data out. So if you are so if this is the Yahoo Finance, and I am on the financial section, and I have already clicked the balance sheet, and these are the balance sheet. I have already reviewed how to read the balance sheet, so you can check my video on my channel if you don't know how to view the balance sheet. So let's start with the first ratio. The first ratio is the current ratio, which is the current assets divided by the current liability. So let's take the data from 2019, maybe the recent data. Okay, 2019. I'll take the current assets, which is given here, 66,225. These are actually in billion. And then I have current liabilities. So first I will compute this ratio to show you how to compute, which is a straightforward. These ratios are not very mathematical driven, as you can see, but the meaning is very important. It helps us to basically cover this. I think I missed something here. 10. Yeah, these are, now it's okay. So just to show you the formula again, the current ratio is current asset divided by current liabilities. So which is this one divided by current liabilities, which is almost 40, right? Oops. So if you see here, so what is ratio is trying to tell us? So this ratio is trying to tell us that my assets are 4.4 times more than my current liabilities, right? And current means these are on the short terms, like within the 1 year time range, right? So this means I shouldn't have any liquidity problem if I just focus on the current ratios. Okay, so that's what basically this ratio is telling. And especially no matter if your profit is coming high, but if you don't have the current assets, so how you will going to pay if you don't have that much cash in hand, especially in suppose this is the coronavirus time, and not suppose, but actually it's happening and which is a bad thing, but revenue suddenly stops, right? And the companies which have this ratio down are in deep trouble, right? So that's another conservative ratio. So this is on the very first high level ratio. And you also notice on when I do the fundamental analysis, I'll use this ratio. And one of more important ratio I want to show here is the cash ratio, which is the total cash, whether it is in pure cash or some marketable securities, divided by the current liabilities. So again, I have hit, so my total cash, right? So if I take this one down, which is, go to the asset section, and you'll get the total cash, which is 54,855, right? 54 billion. So if I take the cash ratio, which is very conservative, right, ratio, because it's just taking the cash. You also notice this is my Facebook stock, right? This is the Facebook stock. So this stock basically is very good in terms of the solvency ratio and the liquidity ratio, right? So what more thing what we can, what this is telling is, this is pure cash, this is more conservative, right? In current ratio, basically when we are taking the all current assets, we are not only taking this the cash, but we are taking the account receivable as well, right, which we haven't yet received. So this is maybe receive in 30, 60, 90, depend upon the company, right? You never know. But when we talk about the cash ratio, this is cash in hand, right? So the company doesn't have to go outside and look. So this is more strict or very strict measure of the company. So that's why I always notice, if you have watched my fundamental analysis on either on Apple, Nike, or three more companies I definitely use this ratio. But for sure, I'll always start with the cash ratio. One more thing what you can do, for example, if I take the 2018 and take the let me put the some data there, right? For the current asset is 50480, right? And the current liability, I'll put it later. Let me put the cash first, which is 41114, okay, which is coming from here. This is current assets, and my current liability is, again, current liability is the short-term liability, right? Don't get mixed with this total liability. When you take the current, make sure these are in same time scale, right? So this is half of that. See, 7017, right? And if I take the, just drag this, basically you see this same, right? Now you have noticed even in 2018 my ratio even better than 2015. So this year, this is, they're not Facebook is not keeping that much cash or the current liquid current asset. But if you notice on any other company in the market, still its 4 times is a way good. I have seen so many companies which the cash ratio, forget about 3, or they are even 0.5, 0.8, or very less, right? So which brings the question how the company can survive. So these kind of questions basically we need to ask when on the different aspect when we look into the company. And if you're new to the channel, kindly subscribe and like this video, so more and more people will look into it. Next time we'll look into hopefully the solvency or some other good metrics for the to continue our journey on the fundamental analysis of the stock. Okay, again, to show you again this ratio, so this is the cash and cash equivalent liability, and this is the current asset over current liability, the current ratio. Okay, thanks for watching, and see you in the next video. Bye for now.